what do you think of the market construct?
I think it's a very good market so far. So to add to the point what Ajay was mentioning, look at the India VIX drop. We are at 13.7 for the India VIX. That's a clear telltale sign that the markets are looking at much more stronger uptrend or upside over the very near term. Such a sharp drop in the India VIX, I have not seen it at least over the last 2-3 months. And that clearly indicates that the market tilt is on the upside. Yes, with every momentum day, like what we saw yesterday, for example, a very strong intraday recovery as well as a good closing for both the Nifty and the Bank Nifty. We are not seeing a very similar kind of a follow through, but I think that's how the texture of the markets or this uptrend is. The more lower the India VIX goes on the downside, the more subdued you might see the index action, but the more stable the uptrend would last for the indices. So I think it has to be a stronger uptrend which one should be looking out for over the next 1 week, and breaking past about 23,000 next week I think is a very strong or very high probability.
Sorry, which level you said next week?
23,000.
23,000. So 500 points within a matter of weeks.
It's still not in our vocab yet, right?
Yeah, it's not ringing a bell. 22,000 is something that we've just digested, and 23,000, great. We're happy to learn these new lexicons that keep coming in the market as well. But let's go across to Nooresh and get a sense. Nooresh, do you think the shakeout which was there in the broader market is done with now?
So once we cross yesterday's high, that is where we confirm that the shakeout is done. So as of now, we've recovered well from yesterday. But more importantly, the fact remains the index is continuing to do well. And over the last 3, 6, 12 months, the small caps had outperformed the index. So it doesn't really matter that small caps also end up doing a lot of outperformance. We could get into a period where large caps outperform. And that is the period I think we are in right now. And we are seeing one by one a lot of heavyweights taking the leadership move. It's just that all of them are not moving at the same time. So today Reliance is down when others are up. So overall the view is positive on the index, and on the small caps one needs to be still remain cautious.
Okay. Right, okay, that's the take coming in the overall market construct. But Kunal, while we are climbing up to 23K on the Nifty, what's going to happen to the mid and small cap indexes? And you were saying that from the recent peak, we're already off 10% on the small caps, right? Is there more correction to go, or do you think they'll be back to joining the party?
See, it's not the traditional correction for mid caps and small caps, because after, say for example, a stock which has risen up by 2x, 3x in the last 1 year, if it goes through a 10-15% correction, we call it as a more time-wise correction, more of mean reversion for the indicators, not a major price retracement or a correction. And so is the case with mid caps and small caps. Mid cap index over the last 1 year, 1.5 odd year, I think has given returns almost 2x and more in that time span. So a retracement of 10% is more of a time-wise consolidation for the index. I believe sooner or later, I'm not sure when, but I think sooner or later the mid-cap index would start to participate and show signs of a breakout yet again. What we've also done is for both the indices, mid-caps and small caps, we've retraced back towards their individual 50-day moving averages. And that's a very good sign, because there was a divergence at one point of time of more than 15 to 20% higher from their respective 50-day moving averages. Those are steep divergences when a trend gets into more into an overbought territory, and once those divergences they correct themselves, that's where buying or demand gets regenerated into the indices. So I believe that we are now into a phase where the mid caps and small caps starting to look attractive, but whether they would come back to their previous swing highs immediately, I think that's something to wait and watch for.
The other thing to watch out for tomorrow would be the Amphi data. Again, I know Anisha will say that what's new in there. It will be a fresh record high.
I know, the same SIP figures which keep hitting
but
fresh
small
highs.
cap, mid cap.
The inflows?
I think the last 4-week correction, whether this month gone by, the small cap has been attracting bulk of the flows, right? Have this dip also attracted flows in small cap, mid cap? I think that will be tested tomorrow.
I have a feeling that
While market is hanging on to very good levels right now, almost 74,000 sensex, 22,500 on the Nifty, we have Shreyash Devalkar, who is joining us now from Axis Mutual Fund, Head of Equity. Shreyash, afternoon. Thank you so much for your time. I'll quickly come on to a point which we have been discussing last 15-20 minutes. Is that one of the factors of the market incrementally now that macros appear very stable? Yesterday, commentary from RBI in our special interview indicates almost closer to 8% GDP is what they are working for this fiscal. Earnings season has just happened. Elections. And by mid-March is when perhaps the dates would come out. I want to only understand, not even going in the direction whether elections are a factor for short-term or medium-term investing or not, but is markets already pricing in, or no matter what, when the dates come nearer, the event comes closer, the street would look at that?
So, it always we observed that when it comes to big events like election, market generally tend to move up prior to that, and in that context, the movement of the market in last 1 month, 3 month, or more importantly, and the 6 month, if you observe, then yes, it is getting broadly priced in. And it's very difficult to time that whether it is going to get factored in per se as far as event is concerned before election or after election or not. But more important is one should look at it more from the calendar year 24 point of view. What next 3 months, 6 months down the line, budget, and after that, the developments within the companies and the announcements when it comes to infrastructure as well as investment in various sectors, including power, etc. So it's not going to be only about election. It is going to be about election, the actions taken post that through budget, and even by various ministries which are going to be formed after that.
Okay, point taken. I also wanted to understand from you, Shreyash, what's your view on this entire private banks versus NBFC debate? Because the latest, actions by RBI has made people believe that banks are better placed, and at least for the next 6 to 8 months, the trade should be go long private banks and maybe take some profits off the table for NBFCs. Your view?
Sure. When it comes to bank versus NBFC, it is more to do with the practices rather than since the banks has been governed by and more importantly more regulatorily observed by RBI for a long time. While in case of NBFCs, in the broader set of NBFCs, that may not have been the case. In that context, if you look at why and where we are finding some issues, then in that context, if you look at the credit growth, which is mostly driven by the retail credit and unsecured, where there are multiple ways in which even the regulators are trying to judge whether this credit growth uh, and it is not in sync with the overall GDP growth, and then whether it should be that way, and whether this money is getting used not in the in some other activities like markets, etc. So when we look at this, then the trade is not about the bank versus NBFC, in my opinion. It is more to do with the practices and which are the attractive segments in that. So when it comes to valuation, definitely banks have underperformed a lot in last 1 year or so, and that is definitely one of the reason why they are performing. Actually, it's when we say bank, actually only private sector banks have underperformed, and in that also few of them. While at large in market, if you notice, the PSU banks have done extremely well, right? You notice that even NBFCs initially did well, and after that it underperformed. So more than calling out a segment like PSU versus private versus NBFC, etc., I would like to more focus on which end use or which end segment these lending entities are catering to, and the outlook on the credit growth in those segments along with the asset quality.
Right. Shreyash, the other thing we wanted to understand was whether there is a tactical call perhaps to have higher allocation or weightage to large caps at this juncture, because the overall view seems to be, I know it's a very case-specific thing, but mid and small caps at large are getting a little toppish.
So, if you observe that already this trade is playing out, though we are not really able to observe it in that manner. So, on a 6 month basis, now already the large versus mid versus small, the differential is 2 to 3%, almost 15% to 18%. That gap is narrowing now. So, the large cap index is up around 15-16%, and mid and small is about 18-19% order. So that gap is getting narrowed. Actually, on the 3 month basis, mid and only mid cap is outperforming. And the large cap and small cap indices performances are same. And on the 1 month basis, actually, the large cap is outperforming both mid and small. So this trade is playing out. In that also, there is one nuance that if you observe that at a broader market level, the PSUs, whether it is banks or it is any other PSU entities, they are outperforming a lot, and their weightages and respective indices are different. So typical mid cap index would have 15% by weight PSUs, and that's where mid caps, you notice that in last 3 to 6 months are outperforming the large and small. While in the large cap, that weight is somewhere around 10 to 11, while in case of small cap, typical benchmark indices, the weight would be around 5 to 6. So that is also one of the reasons. So if you notice X of PSUs, then it is getting the returns are actually closer when it comes to all the three categories. And that's where the asset allocation, by way of calling it out at large and versus mid versus small, that phase is getting over already.